Clapperboard Script Part 1 Gold and Silver Market Crash Explained. Gold and silver are both under pressure today, but the real question is, does this dip signal the start of a bigger crash, or is it the buying opportunity of the year? Stay with me, because the answer could impact every investor. Today, both precious metals are trading lower as several powerful forces hit the market at once. A stronger US dollar is making gold and silver more expensive for international buyers, reducing demand across global markets. At the same time, US Treasury yields are climbing, giving investors a safer way to earn returns without holding precious metals. Since gold and silver don't pay interest, many institutional investors are shifting money toward bonds instead. Adding even more pressure, geopolitical tensions in the Middle East are creating uncertainty. While conflicts often increase safe haven demand, today's market is reacting differently as investors focus more on the stronger dollar and rising yields than on geopolitical risk. Right now, spot gold is trading around $4,060 $4,150 per ounce, while spot silver is hovering between $58 $62 per ounce. Traders around the world are watching these levels very closely because a break below support could trigger another wave of selling. On the other hand, if buyers step in aggressively, this could become the next major rebound for both metals. The next few trading sessions may decide whether gold and silver continue falling, or surprise the market with a powerful recovery. So here's the big question: is this just a temporary correction before another rally, or the beginning of a much larger decline? In the next part, we'll analyze the critical price levels, what institutional investors are doing, and whether now is the right time to buy gold and silver before the next big move. Part 2 What happens next? Now here's where things get really interesting. Despite today's decline, many professional investors are not calling the bull market over. Instead, they're closely watching the next economic data in the US Federal Reserve's next moves. If inflation remains stubbornly higher, the Fed hints at future interest rate cuts, gold and silver could quickly regain momentum. But if the US dollar continues strengthening and Treasury yields keep rising, both metals may face even more selling pressure. For gold, the current trading zone has become a critical battlefield between buyers and sellers. If buyers defend this area, we could see a strong bounce that attracts fresh institutional money. But if support fails, panic selling could push prices even lower before the market finds a new bottom. Silver is in an even more interesting position. Unlike gold, silver is not only a precious metal but also an industrial metal used in solar panels, electric vehicles, artificial intelligence hardware, and advanced electronics. That means even if short-term investors sell, long-term industrial demand could continue supporting silver prices. This is one reason many analysts believe silver could outperform gold once market confidence returns. Another factor to watch is the Middle East. If geopolitical tensions escalate further, investors may rush back into safe haven assets, boosting demand for gold and silver. However, if tensions ease while the US economy stays strong, the dollar could remain dominant, keeping pressure on precious metals. So the next few days could be decisive. Will gold and silver break down and extend today's losses, or will smart money quietly accumulate before the next rally begins? The answer may come sooner than most investors expect. In the next part, we'll look at the biggest risks, expert forecasts, and whether this dip could become one of the best buying opportunities of the year. Part 3 The opportunity everyone is watching. Before you make any decision, there's one thing you need to understand. History has shown that gold and silver rarely move in a straight line. Even during the strongest bull markets, both metals often experience sharp pullbacks that shake out weak hands before the next major rally begins. That's why experienced investors don't panic over a single red trading day, they focus on the bigger picture. Right now, the market is waiting for several major events. Upcoming US inflation data, employment reports, central bank comments, and any new developments in the Middle East could completely change investor sentiment within hours. A single unexpected announcement can send gold and silver soaring, or push them even lower. Many institutional investors are now watching trading volume instead of just price. If prices continue falling while buying volume increases, it could indicate that large funds are quietly accumulating positions. On the other hand, if heavy selling continues with no sign of strong buyers, the correction may not be over yet. Silver is attracting special attention because of its growing industrial demand. As investments in clean energy, electric vehicles, and advanced technology continue to expand, long-term demand for silver could remain strong. Gold, meanwhile, continues to serve as one of the world's most trusted safe haven assets during periods of economic uncertainty. So, is this the perfect buying opportunity? The truth is, no one can predict the market with complete certainty. That's why successful investors rely on risk management, diversification, and patience instead of emotions. The next few trading sessions could determine whether this pullback becomes a forgotten dip, or the start of the next major move in the precious metals market. Stay tuned, because the market is about to reveal its next direction, and it could happen much sooner than most people expect.